And we are here. What's going on, everybody? This is David. Welcome to the channel. This is Stock Talk episode late night. Stock Talk late night episode 13. Woo, what a day, what a day, what a day, what a day. Remember to hit that like, share, subscribe button as you enter. I really appreciate it. And man, all I can say is what a day, what a day, what a day. We're going to jump right into it. Remember, I'm not a financial advisor. Always do your own research. I am not a financial advisor. And we're going to jump right into the market off rip. Let me give me a little water for this one. Get a little drink of water for this one because today was officially my worst day ever in the stock market. And I've been investing for a few years now, but today was the single worst day that I've ever had in the stock market. And, I should have seen it coming. I actually kind of seen it coming, but it's still kind of hard when it hits you right in the mouth like that. So let's jump right into it. The Dow down today 3.98%, down 1,679 points in one single day. And year to date, the Dow is now down 4.70%. But today was not good. Not good at all. We know the tariffs. We know the president talked about the tariffs yesterday, and that sent the futures into a frenzy, and it kind of set the day up for today, what we seen today. So the Dow was down big time. The S&P, woo, the S&P, man, today was just crazy, man. The S&P down 4.84%, down 274 points in one day, man. That's crazy. Crazy. Year to date, the S&P is down 8.25% year to date. Mind you, we was up over 20% plus the last 2 years, but so far, as of April, 4 months in, we're down 8.25% year to date. Okay, let that sink in. The NASDAQ today down almost 6% in one day. And I just remember we was up over 20K just a couple of weeks ago, about a month ago. Down 1,050 points today in one day. And year to date, the NASDAQ is down 14%, and we're only in April. That could be a good thing, could be a bad thing. But like I said, today was the single worst day that I've ever had in the stock market. What's going on, Neo? What's going on, Lisa J? Rough day. How did you guys do today? Oh, down 1.6K for me today. Negative, yeah. Yeah, today was rough, man. It was rough. I ain't gonna put a dollar amount. Yeah, it was rough. It was rough. A little bit down, more than 1K for me today, man. It was just a tough day to watch the market. And I had, for some cover calls, I had a little money to set aside to do some buying today. But even just opening up the portfolio to even do that buying was just rough. But I did add to a few positions today. But just seeing, how the market hit, it was bad. It was bad. So Neil says, yeah, it was just a rough day today, and I'm pretty sure everybody was affected. And you have traders out there who's they're doing real well off puts. I actually thought about buying a put at the end of the day yesterday. Probably should have, just for just to get some practice in because I knew what was going to happen. But at the end of the day, even with I'm not a heavy investor. I mean, a heavy trader. A lot of people are not heavy traders, right? Uh, so the money that I probably would have made on puts today wouldn't have come close to what I've lost in my long term portfolio. Just going to be honest. So yeah, I definitely should have bought some puts yesterday. I was thinking about it, but I'm still in the you know kind of learning stages of the options. But I knew what was going to happen at the end of the day yesterday, or after hours, I should say, when that information came out. So for those who bought puts, or who bought puts either yesterday or today, congratulations on that. And even if like I said, even if I would have bought puts today and made some money off of that, man, it to me is not worth the trade off on those long term, portfolios taking a hit like that. I'm just going to be honest. You hear a lot of people talking online about, oh, this is a nice pullback. This is, it's good. Da, 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 da. But man, listen, we've seen pullbacks in the market when the stock market was going up in green, right? You have those pullbacks because the market doesn't, even in the bull market, doesn't go up every single day. So those are the pullbacks I like. When the market's going up, we may have a day or two where it pulls back and you can add to some shares, this, that, and the third. Those are the type of pullbacks I like. I don't like this, down 14% on the NASDAQ year to date, down 8% on the S&P. Nah, I'm good on that. You know what I mean? Because I know how long it took for us to recover from that. And and everybody's not 21, 22 and all that, you know what I mean? So it takes a lot of work to build up these portfolios. And I'm not a fan of a bear market. I'm sorry. I'm just not a fan of it. And hopefully it doesn't last for a long time. But we're paying attention to what's going on and just the market. I mean, just the environment that's out there right now. It's just, in my opinion, this is just my opinion, it's just not good right now. So hopefully things change because I never root against the economy. I never root against the market. I always want the market to go up with pullbacks here and there, but it's just not. It's just not my forte to have these big swings downward in the market. That's crazy. Let me go back to this here. Like I said, the NASDAQ at one time was over 20K just back in February. Not even 2 months ago. Now we're sitting at 1650, 61. The S&P I know was over 6K at one point this year, 6,100 on that same day in February. And now we're at 53, 96, 52. We was talking about, will the S&P get to 6,500, 7,000 this year? And we're sitting at 53.96. So, just not the direction that I like to see the market going. Just my opinion. Others may feel different. Others may feel good about this pullback, but just not my type of market for sure. And if we take a look here at the fear and greed index here, you see we're at an 8, extreme fear right now. And as you see here, the fear and greed index is a way to gauge stock market movements and where the stocks are fairly priced. So we are at an 8, extreme fear. See, I like it when we're in this yellow greenish area here. So it's just crazy. And tomorrow we have the monthly employment report first thing in the morning. And let me see if I have an article on that. Hopefully the employment report doesn't come in too bad, but let's see. We'll see. what do I want to? Let's read this article real quick here. And it says March job reports expected to show hiring slowed, unemployment held rate steady before Trump's tariffs. So remember, this is March report. So hopefully we'll have some good news tomorrow for the March report. Nothing crazy that can shake the markets even more, but we'll see first thing in the morning. As you see here, the March job report is set for release as markets are in a tailspin following President Trump's stronger than expected tariff stance. The Bureau of Labor Statistics monthly jobs report is expected to show non-farm payoffs rose by 140,000 in March, while the unemployment rate held steady at 4.1%, according to the consensus estimates compiled by Bloomberg. So, and you just see here in this says in February, the U.S. economy added 151,000 jobs, while the unemployment rate moved up slightly to 4.1%. And here are the numbers Wall Street is expecting Friday, according to the data from Bloomberg. Non-farm payrolls plus 140,000 versus 151,000 in February. Unemployment rate 4.1% versus 4.1% in February. Average hourly earnings month over month, 0.3% versus 0.3%. So it's looking fairly even to what was done in from February to March. So hopefully nothing crazy comes out with this report in the morning. So, but we shall see. We shall see. So we got Neo. What we saying, Neo? Thinking about running to put on some stock. I'm buying heavy. Seems like every time I buy 20, 50, 100 shares of stock, 2 weeks later it drops. running to put behind. I'm thinking might be a good play. Hey, maybe so. I think I looked at some futures earlier, and the futures were down a little bit. So if you think it's a good play, man, go ahead and give it a shot. My option thing is to cover calls for the most part, and if I had to choose between a call and a put, I would like the market to be going up so I can do calls. I'm not a big fan of doing puts, but if that's what the market is telling you right now, that's what it's showing you, and go ahead, do your thing, and see how it plays out. So yeah, man. But this market it's crazy. It's crazy. So what is your investing game plan? What is the investing game plan? Do you plan to continue to dollar cost average as the market goes down, or are you in a wait and see method right now? Just you want to see how far the market dips, or you want to see some stabilization in the market, or are you just going to continue as normal if you're on a set schedule? As far as how much you're investing every week, it's kind of the same as dollar cost averaging. Or are you focusing on ETFs? What's the game plan when you have a market that's kind of shaky right now? A stock market that's real shaky right now. What's the game plan that you should be kind of focusing on? So me, I'm still doing some dollar cost averaging a little bit, not as much as I was. I'm relying heavily on my dividends, reinvesting my dividends. I'm able to pick up shares pretty consistently, or partial shares consistently in some of my big portfolio, because I am able to do cover calls, which has been helping me out on the green days that we have. I'm able to collect some cover calls when I can and buy when the market is down, like I did today. So I was able to pick up some more Amazon today. I was able to pick up some more Google, Apple, Tesla, JetQ, SPLG, or one of my yield maxes, I think AMZY. I was able to pick up some of those today using income I've made on some cover calls. I think the prior day, when the market was in the green, I was able to roll some cover calls that created some income. So I was able to pick up some partial shares today. So yeah. But like I said, man, that's still, although it feels good to buy when the market is down, I like when the market is up, and that's just my preference. So yeah. Oh, you in Oxy? I see. What's Oxy trading at right now? Let me take a look. See what Oxy's doing. I was in Oxy at one point too. I actually like Oxy, but today it was down 11% on the day, down $5 on the day. Wow. Oxy year to date is down 11% year to date. So that was a big move in one day. That's pretty much, one day's worth right there in Oxy, man. And Oxy's ran up. Well, actually, it's had a rough year over the last year, down 35% over the last year, but still up over the last 5 years, 237%. So, yeah, Oxy, OXY, Occidental Petroleum Corporation. I did have Oxy at one point. I actually like Oxy, but having a rough year, rough year today and a rough year so far. So hopefully Oxy can turn around. It did definitely had a good run for a while, but running into some rough times. So, but like I said, man, what's the game plan? What's the game plan? What are we doing when the market is shaky right now? What are we doing? Is it still business as usual and it's just a small bump in the road? Or is there a cause for concern to where we may be heading, in the next, few days, weeks, or months? Yeah, that's kind of what you got to do. You kind of got to, regroup and see, how you want to manage your portfolios during these times. So I think it's very, very important to get that under control. So, and I'm not going to be on here long tonight. I did receive some dividends today from one of my favorite ETFs. So even on a crazy day like today, we did receive some dividend income from JEPQ, ticker symbol JEPQ, monthly paying dividend ETF. It paid 54 cents a share for this month, which is the highest it's been in quite a long time. So 54 cents a share. I have approximately, don't hold me to it, but about 100 between the three accounts I have it in. I have about 150 shares of JEPQ. That allowed me, brought in a total of about $81 of dividend income just from JEPQ today. So that was good. Some of it got reinvested in JEPQ, I think in my son's account. And my two other accounts, I used that to purchase a little more JEPQ, but I was able to add to some more other positions as well. But a nice payout with JEPQ. I think that's the highest dollar amount we've received because we've been reinvesting those shares over time. So I don't think we ever received in the $80 range total. So great job from JEPQ. I appreciate that monthly dividend income. And I could have used that to pay a bill or something like that, right? 80 some dollars, or that can cover a phone bill, cable bill, so if push come to shove, that's how, that dividend income can really help, really help you, month to month. So JEPQ's been real solid. Of course, it's taking a hit just like every other position right now. But overall, overall, JEPQ's doing really, really well for me. So that was a bright side for today. So what I want to do is just go through some of these heavy hitters real quick, just to see how they did in the market today, so you can see for yourself. We looked at the Dow, the Nasdaq, the S&P. Let's take a look at some of these heavy hitters just to show you how hard they got hit today. And I'm heavily invested in a lot of these positions, so just imagine how it affected my account. So let's take a look. Let's take a look and see. Let's take a look here. We're gonna go back to Google Finance. And let's take a look. We had Oxy up. Let's take a look, starting off with Amazon. How did Amazon do today? And as you see here, down 9% today, down 17 points. I don't remember a time, the last time I seen Amazon down that much. in one day, especially since the stock split. I don't even know if I've seen it move like that since the stock split, up or down. And that's pretty crazy. But Amazon now is at 178.41. So if you guys are looking to possibly get into Amazon, down 18% year to date. So you down almost 20% year to date. And man, I remember, wow, this is crazy. I'm thinking to myself, man, is this a good time for a call option of a leap option in the Amazon? What do you guys think? Is it time for leap options in some of these plays right now? Amazon is down almost 20% year to date, down 40 points. Let me write this down. And like I said, I don't know what direction the market is heading into, but let me see here. Just thinking off the top of my head, man, it may be a time to jump in, or thinking about a leap option play in some of these big time companies here. But I want to see how far it may go down, or is this just, I don't know, for one day to go down 9%. Man, come on now. And we know where Amazon, Amazon was a $3,000 a share stock at one point before the stock split. We're sitting at $178 a share. That's crazy. That's crazy. All right. We looked at Amazon. What about Google? And Google's even further down. Google's at 152.63. Down today almost 4%. Year to date, Google is down. We might as well say 20% year to date. My pen it. This is another play I'm thinking about. A long-term leap option in Google. Whew. Interesting. Interesting. That's crazy. Google, $152.63. How many people are invested in Google right now? If you're in the chat, let me know if you're invested in Google. If you're watching this video at a later date, let me know in the comment section. Are you invested in Google right now? And as we go, another one of my favorites that's just been taking a beating, the trusty Apple. Apple down today 9%, down 20 points in one day. Year to date, Apple is down once again, almost 20%, down 18.86%. Once again, are these times to look at possibly buying leap options? Remember, that's one of my goals this year, is to grab a couple of leap options. I do have one leap option in ET. Of course, it's not doing well right now, but it's out to 2027. So I have plenty of time on that. I'm going to let it work. I'm going to let it do its thing. So I'm going to show my patience and see where we can go from there. But Apple's down 18.86%. Is trading at 203.19 right now. Down 18% year to date. On the day, it was down 9%. So just taking a hit. And if you didn't hear me say it earlier, today is the worst day I ever had in the stock market. So one single day, crazy. Tesla down 5% on the day, down 15 points. Year to date, you see Tesla's down 33% year to date. 33% year to date, man. Tesla's not doing too well, man. I don't think a lot of people are happy with Mr. Musk and his. I don't want to get too political, because you have the right to believe or feel however you want to feel. That's your right. But I'm not sure if him being in control of this Doge or Dodge or whatever you want to call it is helping his company right now. Um, not sure if it's helping his company right now. And the Tesla shareholders are feeling the effects. And I am a Tesla shareholder. I don't have a lot of Tesla, but I do have enough. And I don't care if I did have a lot. You see a stock down 33% year to date. It's like, hey, what's going on? What's going on? I just don't think a lot of people are happy with the leadership and what's going on at the top there. And let's take a look at Palantir. Today down 4%. Year to date still up 10%. And Palantir was well over $100. It was at 124 at one point, but now it's back down to $83.60. So where's my pen? Some of these I'm just going to take a look at to see if there's some leap options worth trying, worth taking a shot at. So got Palantir there. Another one, trusty NVIDIA. And this may be the last one we'll look at just to see. You see NVIDIA down on the day, 7.8%, down 8 points. About to dip back below that $100 mark, sitting at 101.80. And, everybody was excited when NVIDIA, split and thought it was going to be on the run. And I was one of them. As you see, it was at 149 back in January. And since then, it's just been on a steady decline. So if you have puts on NVIDIA, man, you're rolling right now. Very risky play, but you're rolling. NVIDIA is down 24% year to date. So, man, a lot of these stocks have just been catching it. But on the bright side, like I said, it could be opportunities. I hate that we have to dip this low for those type of opportunities, but you got to get in where you fit in, I guess. And so Nvidia's taking a hit, just like most of the stocks are taking a hit. So and for you long-term shareholders, maybe it's a time to look at the ETFs. Maybe it's a time to look at the VOOs, VTIs, and things like that. So one more. Let's take a look. We didn't look at Facebook or Meta. And Meta was down today, 52 points, down 9%, 8.96%. But year to date, Meta's down 53 points, 9%. So that was kind of, a one-day shot here because we know Meta has been running at one point, was up to 736 back in February. But since then, steady decline, like most stocks right now. Most stocks, most ETFs, steady decline. So the only thing that's been kind of holding decent for me is my gold and silver. Everything else is getting hammered. SCHD, has been pretty solid, and you do have other ones that's pretty solid. May not lose as much as others, but man, it's just been a bloodbath out there. These tariffs was just, the energy from the administration has just not been good for the portfolio. So, but I hope everybody is in a position where you can kind of make some adjustments to what you're doing, how you're investing. If you need to, sit on the sidelines for a while, there's nothing wrong with that. There's nothing wrong with sitting on the sidelines and just kind of peeping out the scenery and what's going on before you just jump in and throw all your money into a market that could be, tipsy, turvy, whatever. For me, I like stability. I like to know that the markets are stable because from what I've seen over these last, 9-10 years plus of just having my eyes on the stock market, man, it's hard to bring the stock market down. Like, it's hard to do that. I think that, in my opinion, the stock market is designed to go up. And for most investors, we want to put our money into investments that's going to go up, right? We're trying to put our money to use. I'm not rich. The average person investing is not rich. You know, we see what type of rates we get at the bank, so we're trying to put our money into investments that's going to, increase over time. And the stock market is one of those tools to do that. And from what I've seen, it usually goes up. You have a couple of years here or there where it may pull back, but um, for the most part, it goes up. So for the new investors, man, don't get discouraged. It's a crazy time right now. Pay attention to what's going on, but be ready to put your money to work. I think eventually it's going to turn around. Just don't know. Just don't know when. I hope it's soon, but honestly, not sure. Not sure. We just got to kind of wait and see. But the stock market is still, it's no entry to, no barrier to entry, right? It's the easiest way to, put your funds to work. So, for me, once again, like I said last show, um, still gonna, do my cover call. Still gonna have my dividend income. Still going to dibble and dabble in some option plays. Still going to buy. When the market's beat down, still going to put some buys in if I have some extra cash. Most of my extra cash is coming from the cover call income, so that's been helping me out tremendously. I need to kind of keep tabs on how much I'm making, able to generate each month just from cover call income. It's not a crazy amount of money, but it's enough to make sure I'm investing consistently, which I think is still the key during this time. Is I got to kind of pick and choose a little bit more when I choose to invest, which is helping me become a better investor anyway. But it's paying off. It's going to pay off in the long run. So, but yeah, I think that's about it, man. We're about 32 minutes in. The stock market is crazy right now. Worst day I've ever had in the stock market. Lost a few $1,000s today. A few $1,000s today. So it's just hasn't been a good day. It hasn't been a good last month, actually. And I had such high hopes coming into the year, whether I agree with the administration or not. I had high hopes for the stock market and for crypto. And so far, it's just been kind of, it's been really shaky so far, not going as planned. But it's only April. At the same time, it's April. It's 4 months in, and 4 months into the year, and I expected things to be a little bit different around this time, right? So, but we've seen tough times before. Just got to hang in there, stay consistent, don't get discouraged, pay attention, but don't get discouraged. It'll probably make you a better investor in the long run if you're able to come out on top of this. So, but yeah, man, just let me know in the comment section in the chat. What's your game plan? We're 4 months in. We're 1 quarter of the year down. So, what's your game plan for the second quarter, third quarter, fourth quarter? Let me know in the comments. What you planning on doing for the rest of the year. But yeah, I think that's going to be it, man. This is Stock Talk Late Night Episode 13. I appreciate you guys for tuning in. Appreciate everybody in the chat. Everybody's watching that's not in the chat. Everybody's going to see this later on. Stay in the game. Stay in the game. It's probably some good learning opportunities. And but at the end of the day, we're gonna come out on top of this, man. So just don't get too discouraged. Don't get too discouraged, and just sharpen up your skills, whatever that may be. Sharpen up your skills. So, but until next time, guys, I think we're gonna shut it down. We'll be back next week. I can't promise Tuesday because for some reason I just be beat down on Tuesday. Maybe it's work that's getting to me. So, but sometime next week, probably next Tuesday or Thursday, we'll be back. Hopefully things have kind of settled down in the market by then. And, we can have a little bit more clear direction of where this thing is heading to. But, as for right now, things are just kind of shaky. But we're going to stay in the game and see how this thing plays out. So, but until next time, guys, I will talk to you Later. Remember to like, share, subscribe, hit that notification bell, and we'll see you later.